Gold's strong losses this week are somewhat puzzling to our next guest, Jim Wyckoff, who says this downward pressure could have deeper implications for other markets. Jim, it's been a while. Thanks for being back on the show.
Hi, Daniela. Always nice to be with you, and always nice to talk to my Kitco readers and listeners.
Absolutely, Jim. Well, not a good week so far for gold. The metal hitting a 3.5-month low yesterday. Bounced a bit Wednesday morning, but is back down. So what's puzzling about the recent losses that we've seen in the gold market, Jim? Can you put your finger on it here?
Well, Daniela, I don't think anybody can put their finger on exactly what happened Tuesday. But the one thing that was puzzling to me is it seemed that the general business media was blaming a stronger U.S. dollar, blaming some Fed speak that was a bit hawkish. But if you look at what the U.S. dollar index did on Tuesday, it just had moderate gains. Certainly nothing that would suggest a $40 an ounce loss in gold. And if you look at the Jeffrey Lacker's speech on Tuesday that was a bit hawkish, suggesting the Fed might have to raise interest rates here in the near term, that certainly was nothing surprising. And it was also not anything new. We've had several other Fed officials sound off some hawkish monetary policy comments, and the gold market has not reacted like that. So, yeah, it was puzzling. I think there was something maybe bigger at play. I'm not sure what it was, but the thing that
like a bank dumping gold
could happen.
Could it be a big player dumping gold, Jim?
Pardon?
Could it be a big player dumping gold?
It could be. In fact, I got some emails yesterday that suggested that maybe the troubled German banking firm Deutsche Bank might have been liquidating some gold holdings in order to raise cash in case of any run on the bank. I don't know. That's pure speculation. We'll probably never know, but that could be the case. Also, I read that maybe some larger fund type players, futures players, they had been long gold, as evidenced by the CFTC Commitment of Traders reports. They had been long gold, but actually gold prices have been trending lower for the past 3 months, and maybe these big hedge funds or these big funds just decided to throw in the towel and liquidate those positions. But it's kind of surprising they would do it all at once. So it was an odd day. But going forward, what this could mean, this big volatility day that we saw in gold.
Yes. What could it mean for other markets?
It's a portent to what could happen in some other markets as we move through October. And history shows that October is a turbulent month for the stock market and also for other markets. So this big slide we saw in gold on Tuesday may gyrate some other markets to be volatile here in the near term.
All right.
Ironically, if that is the case, if that theory plays out and we see some volatility spread to other markets here in the next couple of weeks, that could actually wind up being bullish for the safe haven gold market, when in fact the gold market may have started off that instability in the first place.
All right, Jim, with the time we have left here, just quickly, where does gold go from here then? How do you expect the metal to trade?
Daniela, I find for December Comex gold, I've got support at 1259, resistance at 1300. December Comex silver, I've got support at 1750, resistance at 1850. And my Wyckoff market rating for both markets is 4.0, and that is in the bearish camp.
All right. Thanks, Jim. Thanks for joining us.
Thank you, Daniela. Can't wait till next time. Bye-bye.
Thank you for watching. Stay tuned. We have veteran trader Bubba Horwitz joining us from the CME up next.